the recording and I'm gonna share. I wanna make sure everyone's okay. I'm gonna share my screen. And then we're gonna dive in to this presentation, right? So here we go, y'all. And like I said, you have any questions, go ahead and put it in the chat and then I'll get back to that. So as promised, I mentioned that I was going to teach you guys how you can get your clients' payments reported to all 3 credit bureaus. So this is a credit repair client only training we're doing tonight. So I'm going to talk about how this applies to credit repair companies, credit restoration, whatever. And as a bonus, I'm actually going to show you how you can create your own credit strong or self-lending program. I'm going to teach you how you can help your clients fund secured lines. And I'm also going to show you how you can become the bank for your clients. So buckle up, let's do this. I'm stoked. So as a credit repair company, you have 3 main focuses, right? Number 1, you need to clean up your client's credit history. That's where you're the expert in, right? Additionally, you need to help them improve and strengthen their credit. And then finally, you need to provide the education and some resources to continuously help them grow. That's the biggest thing. You need to help them recorrect and understand what they need to do to get healthier credit scores and to maintain these healthy scores, right? So the methods to growing your clients' credit scores, and this isn't me training you guys are the experts. You know what you use to help grow subprime people's credits, right? You use secured cards, right? Let me mute some people here, make sure everybody's quiet. Please and thank you. You use secured cards, you use Credit Strong or Self, like I mentioned, you use Experian Boost, you use credit lines, NAV programs, right? Have you, any of you, and I would like some participation for a second in the chat, have any of you noticed how many programs have stopped reporting in 2021? Like the My Jewelry, there have been several ways to boost credit that now are no longer. I would love it if y'all could drop some of the companies in the chat, because like I said, that's where you guys are an expert. Have you not noticed there's been a rapid increase of companies that are no longer reporting to the credit bureaus? There's a shift. So as credit repair companies, you're having less and less options to help these subprime credit people kind of bust through that, right? Same thing with secured cards. Oftentimes you're dealing with a client that doesn't have very much money to begin with. Maybe they don't have much of a savings, right? So in order for them to get cash to load these secured cards, oftentimes they're only able to load a bare minimum, right? So that's going to actually make you helping them repair their credit take longer, because if they could load these cards with more cash, then they could keep that utilization down. They could have those higher credit lines reporting, and it's going to strengthen their credit history. And that's the main thing that you guys are doing, right? So next, I'm going to go boom. So typical credit repair payment structures, right? I've asked some of you what you guys charge for a setup fee or how much your monthly fees are. It doesn't matter what you charge, okay? I'm not here to tell you should change the way you take payments or whatever, right? Most of you have a setup fee, right? Most of you have a monthly payment. If you guys could drop in the chat what those look like, I would love to kind of just see what everybody is offering on this particular recording, right? But each of you typically have a structure like that. So right now, as a credit repair company, you are setting up clients and you are taking a setup fee and a monthly payment fee for your services, right? None of those payments are being reported to the credit bureaus. Now I can show you how you can get this set up to where when they make that $97 setup fee and they're paying their $119 per month, those payments are going to be recorded as an installation loan, and it will positively report every month that they make that payment. So how do you set up your clients' payments to report? So what is this, right? Well, it's a platform, right? It's fintech. So there's a platform. So you sign up and you get this platform. You get access to a CRM, which is going to, all of you in the credit repair have a CRM. I don't need to explain what a CRM is going to do, but you're going to get your own CRM that's going to track every single client for you. What you're going to do to get these payments to report to all 3 credit bureaus, right? You're going to go into that CRM. You are going to select how much, and I'm actually going to show you live at the end so you guys can really see how smooth this platform works. But you're going to select an amount. You're going to create the term. You can actually create an entire invoice so you can charge multiple things, right? So maybe your credit repair is $150 a month. Maybe they have to do the credit monitoring. Maybe they have to pay for all these things, right? You can now invoice them, excuse me, for this amount, create their monthly payments, and be collecting those monthly payments, and they'll be reporting to all 3 credit bureaus, right? So then your client, you'll select, and your client will get a down payment. You receive 100% of that payment. That's the down payment to get started. You already take one of those, right? You already take that enrollment fee or the setup fee, whatever you call it. You're matching that same thing. They put the down payment. I see Andrea does $129. I see Miracle does $299. I see Jay does $249. You put that down payment, $249, Jay. You set it up a 6 to 8 month period. That's the length of the term, right? And that's going to come up again, reporting to all 3 credit bureaus as an installment loan. Their payments will report every single month to all 3 bureaus. Make sure everybody's good. Here we go. Okay, so actually, I'm going to show you some screenshots here of how it goes. So what does it look like? You're going to log into this CRM, and this is what it's going to look like. And it's going to say, what is your estimated cost of service? The minimum you have to put is $300, right? I put 600 on this, right? So if you were doing $100 a month for credit repair for 6 months on average, that's what that would look like, right? Well, you can also do a line by line. So if you were going to do a 6-month term and helping set up their credit repair, right? And I understand that a lot of you guys are month by month. You don't have those contracts, right? But for the sake of creating the payment plan and having it so it reports to all 3 bureaus, you do have to set it up like this. So what you would do is I consult my credit repair clients to do either 6 or 8 months. And that way that installment's going to build their credit for that 6 to 8 months, right? In this example, I show credit repair at $100 a month. I show credit monitoring at $25, and then I do an extra $100 consulting fee, right? So I'm just showing you what you can make an invoice look like. Once you do that, you hit the next button. You add how much is the down payment. I use $297 for this example. Next thing you know, this is what it looks like. So with the $297 down payment, their estimated service is $1,350. You could do it as long as 12 months if you want. That's what it looks like at 6 months. And over here, this is what it looks like at 8 months. So you set all that up, and now they have that monthly payment. You can see the interest rate here. So your client will be charged a rate to do this, right? 22%. It might not feel, great to your customer, but we always want to talk about how when you're in subprime and you're growing your credit, there's a cost to that, right? A lot of these secure cards, they want a setup fee, then they charge yearly payments, and the interest rates are pretty high, right? What we're doing is we're taking their credit repair payments and putting it towards boosting that credit. So that comes at a bit of a price. So you see this 22%. What if you have them on an ongoing plan? And Ruben, that's a great question. And I'll answer that in a little bit, okay? So like I said, this is how you get the estimate. You'll have their down payment, right? Total payable today. You select whatever, and then it's going to have you send them an invoice. And that's how they set everything up and things get paid. But the thing about this platform is it does even more than that, right? So if you want to set up your clients' payments like that, you can do that. Another way that you can actually use this platform is like there's 4 other top ways, right? Number 1, you could create your own credit strong or self-lending program. I'm going to dive into that in a minute, because instead of reporting their monthly payments, you could actually just create this program and have them paying that monthly payment and having that report as an installment loan, to where you can still have them do multiples. Can you change it to 4 or 5 months? Yes, it's absolutely, you have all the control. You can put any total amount of money on this platform up to $20,000. Your client will get a guaranteed approval. It doesn't do any credit checks. There's no credit check, but it will report to all 3 credit bureaus. If they default, they will get a late, well, if at first they default, they'll get a late payment. And if they truly default, that will come up negative, of course, on their credit report as well, because they're not paying the installment loan. If they stop paying, you are under no liability. In fact, this payment platform will actually protect you. So imagine a client, you set them up for a 6-month term. And like I said, I usually pick 6 or 8 months just so you can have that credit line going for that length of time, right? We're looking to strengthen their credit. You know, Ruben asked, what if it's ongoing? Have a contract where it says you renew it every 6 months. So what you'd go in is you'd go in there, do the same thing, renew that. You'd have it go on for another 6 months, and then they'll have another 6 months of that reporting. If you wanted to do ongoing and have them do it for a whole year, you can do that. What you're doing is you're matching what you're already doing. I'm not having you change anything. You're already charging $297 a month. I mean, for a setup fee and $109 a month for a monthly payment. Keep doing that. You can just plug it into this system. They pay a little bit extra fee, and now they have this installment loan. So you can still use Credit Strong. You could still use Self, but then you can create your own. So imagine having a credit repair company where you actually have your own product that you can use to help people grow their credit score in an installment loan. And you can create what, like I said, I'm gonna have a full slide on this. I don't want to get too ahead of myself, but you know, you're bringing more value and you're improving the way that you can help your clients, because now you have another positive line. You can also offer financing to load the secured cards. What I said earlier, you guys know that if you can load a card, I'm creating my own, I love that, Miracle. You guys know if you can load a secured card with more. If you can load a card with $1,000 over 100, that's going to be better in helping grow your credit score, right? So some of these people don't even have the money. It takes them time, right? So yeah, the credit repair takes time, but what would your clients' results look like if all of a sudden they can get financing to load these secure cards? They can properly use them because you're teaching them about utilization and how to financially, you know, use things appropriately, right? What if you can do that? It's going to change how their credit score grows. You can also help with financing at eliminating credit card debt. Credit card consolidation. I made a post the other day on my Facebook. People don't realize how long it will take you to actually pay off your credit card debt. If you're making minimum monthly payments on like 40 grand, it's going to take you 83 years to pay it off. It's just insane. So you could actually become a consultant and help these clients in your own business. This is an added service. This is a value add. No one's asking you to join any other company. This isn't like you got to recruit other people. This isn't anything like that. This is a platform that credit repair companies, if they use my innovative technique and spin on this, you can turn into, this is what can set you apart from the credit repair companies. And I've been speaking with my credit repair clients all week about this platform, and their mind is blown. You can ask Latoya. We were on a call as well. Who determines the interest rate? It's going to be the amount and the term. That's how that goes. Typically, if it's over 12 months, it's probably going to do the 22%, but if in shorter times, it can go as low as 12 to 13%, Jay. You can also, ask Latoya about our call yesterday and what this can do. She actually didn't want me to share how you can create your own Credit Stronger or Self program. You can also offer payment plans for financial coaching, right? How many of you offer consulting or one-on-ones or other things outside of credit repair? You can actually offer the payment plans for your coaching. So now, by the way, on the side note, your clients go from I can't afford this, or I can't do this yet, or I can't, I don't have enough, to we have options, right? And this platform, it's a guarantee. There's not going to be anyone that's turned down at all. Everyone will get approved. Literally everyone will get approved. As long as they're a US citizen, they will get approved. Everyone will get approved 18 and older. I don't know how many times I'm going to say that, but everyone's going to get approved. You guys know what Credit Strong is. I took a screenshot of this. You know, with Credit Strong, you can subscribe to 1,000. So it shows that you're building you're getting an installment account reported for $1,000, right? We can do the same thing. You would just create your own. Is it going to be as cheap as $15 a month? You'd have to do, and by the way, the maximum term on this is 48 months. Okay, so that's the highest that you can pick. But you're able to create a subscribe just like this, where they will have an installment account reporting, and you could set it up like that instead of having their payment plans reporting. You can do something like this. So you can use it two different ways, right? Here's an example of that, right? If you wanted to give your client, if you wanted to give your client a $1,500 reported installment loan line, if you look at over 24 months, and actually here, Jay, here's some other examples. If you do it over 24 months, you're looking at 16.49%, $3 per payment, an upfront payment of $77, total payable today, because they got to do the down payment. This total payable today goes to you. This whole thing goes to you, okay? The down payment, all that right there, it goes to you. So this is an example of how you can make your clients have a $15,000 reporting line. Now, what you would want to do is when you would collect these payments, you'd want them in a separate account. You're going to need an accountant, you know. But what happens is at the end of that term, however you want to set it up, every company is setting it up differently. I'm not here to tell you right, wrong, or indifferent, but you set up and you deduct like a fee or whatever for providing those services. And that's how you make a little kickoff from that. Hope everybody understands that. So again, I mean, I just went over this. You create your packages. You can create your own setup. Like I said, just like Credit Strong or just like Self, you can create something similar. The lowest you can go is 300. If your client can only start at 300, go for it, right? Do 300 at 6 months. You're collecting all the payments. Maybe you keep the down payment. I don't know how you want to work it out with your clients. It's totally up to you. That's something you add to the contract, but it's another service that you get to add, right? So you can either have their payments reporting to all three bureaus. You can create the credit growth with your own company. If you are Credit Solutions 365, you can have the Credit Solutions 365 self-funding, whatever. Be creative with it. You can create that. That's what's cool about this platform. Now, the other crazy part about this, which, I mean, I think it's real dope because I come from a finance background, is also a part of this platform is you get to fund your clients. How many of you, and I know some of you on here actually are a referral client to me and send people to me for funding, you can now also offer financing. So this is completely white labeled. So again, if you're Credit Repair Solutions 365, your link is going to say Credit Repair Solutions 365. Your clients are going to feel like this is your platform. You can get individual startups and small businesses funding up to $100,000. Subprime can get approved. 500 plus can get approved. I also, on a side note, want you to know that 500 or subprime will get rates reflecting of that in the high 20s, possible 30s, even 45%. If you don't want your clients to have access to those offers, you can let the platform know and they'll remove those offers so your clients never see them. The way that I consult is I say, hey, you know, if $10,000 is what's going to be somebody that can start a business and they have no means of making that $10,000 anyplace else, and it's going to take them maybe a year to save up that 10K, why not borrow 10K at 45%? Sometimes it makes sense. I know if I was in that situation, I'd borrow it, but I also have long-term focus, right? But you get 12 to 72 month terms. You get rates starting at 4.99%. There's no restrictions. You want to fund cannabis? You want to fund coaching and consulting? You want to fund e-commerce? You want to fund insurance companies? You want to fund other credit repair agencies? Whatever you want to fund. If someone wants to buy a car or a boat, you can fund them. Neighbor Bob, you can fund Neighbor Bob if you want, because you own this platform and you are now a loan broker of sorts, and you're connecting people to financing. So how can funding help your clients? Like I said, there's a number of ways you can do the loans, right? You can help funding the secured cards. You can help them pay off or pay down their credit card debt. You can create positive reporting credit, like we said, with the payments being reported. You can get them a loan to start or grow a business. You know, the home improvements. We do this platform will do home improvement loans. Okay. So how does becoming a lender look like for you, right? So a few things. To get these loans for your clients, it's not free. And I want to break down any type of fees so you guys are fully understanding of this. I know a lot of you folks are used to paying monthly payments for things, or pretty large high ticket numbers for some platforms. So I think you'll be surprised at the value here. But what does become a lender look like, right? So as a company that provides lending products, you can collect a consulting fee. You can collect a consulting fee anywhere between 6 and 10%. I already have a consulting agreement that you can use. You can put your logo on it. You can add and subtract anything, because the platform will charge you a 3.9% fee. Okay. Why do they do that? Well, because the platform has to be paid for, right? So I teach my credit repair clients and the other people that sign up for this platform, I teach you how to use it to where your customer will actually pay that fee instead of you, right? So to offset the costs, you should charge anywhere between 6 and 10% on loans, and that 4% gets covered. It's very typical in the lending space to charge up to 10% for a success fee. And that's something that you would discuss with your client ahead of time. It would be something that's an addendum in your contract. So you wouldn't even have to actually change your contract. You would just add an addendum and add it that way. Clients really don't complain about the success fee because you're giving them the ability to borrow money when the banks, credit unions, and other means won't lend to them. For those of you that don't know, banks, credit unions, and SBA, they decline nearly, roughly like 85 to 87% of all applications they decline. They don't approve much. Okay, so you being able to lend, especially in a while we're still kind of in COVID, this really will also set you apart because you're no longer you're not even sending them to me anymore. You know, you're really running your own platform. And side note, you're not under any liability or responsibility for defaults on this loan. No one's going to come after you. Your business isn't going to get in trouble if a client defaults. That's not any issue. No one's ever going to come knocking on your door. You're not going to get an email saying, hey, it's on the platform and it's on that lender to collect that. So that's not even going to be on you. So a quick breakdown on the revenue. So I want to give an example of what that looks like in case anyone's a little confused by this. Let's say you charge an 8% fee. You'll net 4%. On a $100,000 loan, your company will be paid $4,000 from the client for getting that loan. So let's say you have a client, I know Brian's on here, he does e-commerce, and Brian puts his buddy through and he gets a $100,000 loan to start his e-commerce business. Brian's company is going to get paid an extra $4,000 because he helped him get that loan. Imagine you get 4 of those every month, and now you're bringing in nearly $200,000 in revenue. You know, imagine what that looks like on a $50,000 loan. That's $2,000 a client. So, this can really work out in a number of different ways. It gives you the ability to create another stream of income without really having to do any other physical work. You don't have to really train to be an expert on this because the platform does everything for you. So before, I want to make this a little fun, right? Because, we don't want this boring. So going over all this, what do you guys think something like this would cost? Like, here comes the upsell, here comes the ask, here comes the, what is this worth to you? What does this look like value-wise? And don't say it if you already know it, because some of you have signed up. But what do you actually think something like this, a platform, right? A platform that allows you to report your clients' payments to all 3 credit bureaus, a platform that allows you to give out loans to anybody for anything in the United States, as long as they're a citizen and as long as they get approved, they can get funding for anything. You ask the platform for 10,000, they get approved for 20, they can take all 20. I had James Browning is one of my clients, and he signed up for the platform because he sells trucking insurance and warranties. And some of these truckers are paying like $50,000, $37,000 for their insurance. He got this platform. He's giving loans out for the insurance premiums. No other lender will loan out to insurance premiums, but this platform will. So he's getting his trucking clients not only funding for the insurance premium, but funding for a new truck, for the gas, for another trailer to pick up more loads. Like, this is really great. So I'm seeing some people say $300 a month, $199 a month, $250 a month. I love all this. 10% of all loans funded. It seems like a lot, right? Here's the deal. It's a one-time fee of $240. You pay a one-time fee for the $240. You must be an LLC or an S Corp. All of you should be that way. There's a $49 maintenance fee that you'll be charged monthly until 6 people are funded. The first 49 is charged upfront invoice, right? And then, like I said, that 3.9% fee, first of all, that's a tax deductible. Secondly, though, we're going to offset that by charging people anywhere between, like I said, anywhere between 4 and 10%. If you're giving them funding because they're purchasing a product from you and you're already making a lot of money from that product, you could charge them just 4%. You could also eat the 4% and just use it as a tax write-off. That's totally whatever you want to do. Can I charge more than a 10% fee? Absolutely, Ruben. This is for you to do. If you want to charge more than that and your clients see the value, I say go for it. That's completely up to you. I do know other companies that actually charge up to 25% and only pay for you. I don't know that and only pay $399. I don't understand that question, but yeah, you can charge more than 10%. That's the breakdown. So I'm going to go over this one more time. What exactly do you get? You're going to get a lending platform. They advertise it. They have 20 lenders. They actually have 25 lenders. You will get your own link. So you sign up, you pay the $240 one-time fee. I suggest paying via card because you'll get onboarded in 1 to 2 days. If you pay via ACH, it will take 3 to 5. And they only work Monday through Friday. So, you know, they're asleep, they're chilling on the weekend, but you get instant approval. So you get a link, you'll send it to your client. You can send it, you can put it in a funnel, you can put it in a YouTube video, you can put it in an email, you can add it to your website, you can do whatever. You'll get instant approvals up to $100,000. There are no hard pulls for offers. Your client will enter their information in there. They will get instant offers. If your client needs time to think or isn't sure, the platform actually follows up and will do the sales process for you if you don't have time to do it yourself. So let's say a client doesn't take any funding, it's been a few days, the platform's gonna follow up, ask if they have any questions, and we're gonna take care of that for you. You're also gonna be able to track everything in your CRM, it's all yours. And like I said, subprime can apply. 500 credit scores do get approved, okay? And then the second part of this platform was really the whole first part of this presentation. It's the protected payment plans. If you, it's up to 20,000. So if you have a client that's like, I want a $20,000 reporting line and I'm willing to pay this money, you could set that up as well. It goes up to 20,000. The terms go up to 48 months. 100% of the down payment goes directly to you. The monthly payments report to all 3 credit bureaus. You can use the protected payment plans in so many different ways. You can now take payments on any product or service you offer. Do you have to be licensed to be this type of lender? Absolutely not. You need to be an LLC or an S Corp in order to use this platform and to offer it to your clients. Will we know when funds hit client's account? You will get email updates when a client is being funded. The point is to keep really good open communication with your client through the whole process, to let them know about any fees on the upfront. And actually anyone that signs up for this, you get aftercare and training not only from the platform but also from me. So the platform will actually train you and all of your sales reps how to properly sell this and how to properly navigate through the platform. So there is no lack in training. And then with me, I teach you creative methods and strategies on how to do this. The company itself doesn't market this product this way. I saw this product. I'm constantly trying to innovate how financing works, especially for startups and small businesses, and trying to find ways to improve your cash flow, how to get you more sales. And when I dove into this platform, I saw how it would just work so good for the credit repair industry. Business credit. If you're selling a business credit course, you guys can use this payment plan for your courses that you sell, for coaching. Sharon, let me clarify that, okay? The lending platform does a soft pull to get you a loan approval up to $100,000. The protected payment plan, no credit check, guaranteed approval of anyone. They'll set up their account for the payments to go through. When they make their payment, it positively reports to all 3 credit bureaus as an installment loan. If they don't pay or default or have a late payment, it will also reflect as a negative, of course. So, we're all working to make sure the clients don't do that. Now, let me tell you why I keep saying protective payment plan. If you have a client that does default, let's say you picked a 12-month term and they default on month 6 and they stay in default. Instead of you losing out on that money, you'll actually go into the back office, you'll open up a ticket, you'll show proof that you've delivered the services, and then the platform will pay you 90% of that monthly payment to the end of the term. So this protects you from never getting ghosted or the chargebacks or anything, because this protective platform, you can invoice, you can take ACH payments, you can take auto payments. That's what's great about this platform. Like I said about the training, you get in-house training. They will teach all of your sales reps. They will teach you. They will get on multiple calls for you. We're always here to answer questions, myself and the entire team. So let me just open this up to questions right now. Come on, y'all. Because I'll call on people. Sharon, did that answer your question? Okay. Oh, ooh. Ruben, what's up, man?
I have a lot of questions, and so one of the main question is on the guarantee protection plan, right? How to I'm not too familiar with that. Would you go more into detail with it? I guess I jumped a little late on the call.
No, that's okay. So the guaranteed payment plan. So the guaranteed payment plan, or the protected payment plan, it's a guaranteed approval. So you guys are in credit repair. So most of your clients don't have a 600 or 700 credit score. They have a 400 or a 500. So you're taking off the negatives, you're attempting to clean the history, and then you have to add positively reporting things. And of course, when you have 400 and 500 credit scores, there's only certain things that you can get your clients to add onto their credit to positively report. You have the credit strong, you have the self, you have, the Experian boost, you have these other things, you have secured cards. Well, what you can do is, what I realize is credit repair companies can tap into this platform, sign up for it, and use both parts of the platform to help grow their clients' credit scores. So you can so if you're already taking an upfront payment and then a monthly payment from your clients, you can plug that into the payment plan. So like I said, if you normally charge $100, and I'm just making it easy for math, if you normally charge $100 a month for your credit repair and you do a $297 up front, okay, let's say you go into the back office, you select a 6-month term, you select $600 as the credit repair, and then it will ask for a down payment. Well, it would be additional. So pardon me, it would be additional to you'd put you'd put $897 as the total. and then it would ask for the down payment, you'd put 297, and then that 897, oh, I mean, pardon me, that's
600.
I'm doing so terrible with math.
The
See, that's why I
600.
said I was trying to make it easy. That's
Remaining
why
balance 600.
you
Yeah.
get what I'm saying, though. You get the essence of
Right.
what I'm saying. It's so bad. I'm in finance and I can't do math simply. What it will do is it will break it up. So even though you're already taking monthly payments, right? So why not have those monthly payments report to all 3 credit bureaus? That's one way you could do it. Additionally, you could create your own program similar to Credit Strong or similar to Self, where you can set that up to where, okay, you want $1,000 installment line reporting to your credit. We can give you 12 months, and this is the upfront fee. And then every time they pay that, it's going to report to all 3 credit bureaus. That's going to give you another value add. That's going to set your credit repair business really in a whole other ballgame, because if I can go with,
Sure.
like I want to go to
Yeah.
with Lexington Law Says No One Ever that knows better, right? And they're charging the $99, and it's going to take
Right.
them 72 years to fix my credit. Or I could go to Ruben, who charges the same or whatever. And guess what? My payments are going to report to all 3 credit bureaus. That sounds really good to me. And that's the big value add, is we're going to be able to maybe even help you quicker. And that's the thing, is over time, you're going to have to test it and look at the matrix, but it should actually help grow your client's score quicker, because now you have other ways to add these lines to get them reported. You could literally put them through that every 6 months.
Sure.
If they
Yeah.
wanted to. You can keep adding that.
Actually, okay, well, great. Thank you very much for explaining that. Now, my next question is, do you guys have a way of funding that? Meaning that credit restoration program, to where now, instead of us waiting for the full payment of the $600 or $1,000, you guys will fund it and you guys report it to the credit bureaus.
So that's what the other part of the platform is. The other part of the platform gives you the ability to lend, to offer loans for anything.
Got it. So you can get it from there.
Yeah. So what I tell how I consult you guys is, here's the deal. There's no upfront fee to see if they could get a loan. There's no hard pulls to see. It's literally going to take 5 minutes of their life. Why not see what they can possibly get? It's also going to give you some leverage to be like, okay, see, this platform, we're going to have to do it. We're going to have to get our sleeves rolled up, and it's an easy pivot to then go to the payment plan. Okay. So since we couldn't get the loan approved, and that's the thing, is preface this, be like, listen, we know that we're rebuilding your credit. You don't have a lot of options right now. I do have a platform that can approve subprime credit. It's not going to hurt you at all to check it out. Why don't we see what you can get approved for? You can get them approved for 2,000 or 10,000. Those loans will report to all 3 credit bureaus. Those loans you can make a success fee on, and that creates another revenue stream for your company. And those loans get you paid up front. That's an upfront. You're right, because they're going to get that funding. They can pay that invoice, and you make that money up front, and you're feeling good. You can actually do a loan payment plan combo. You can do this so many different ways, and that's why I said whoever signs up for this, you're going to get a one-on-one with me, a 30-minute one-on-one, and we're going to talk about how to specifically market this and how to set it up best for you. So if you're like, I don't know if this is going to be right, or how can I really get this up? So does this actually let us report our clients monthly? I'm glad, James, that you hopped on at 6:44 asking the question about that. James, I'm gonna come after you, bro. I know you.
I have another question, Ashley. I'm sorry.
Go ahead, no, you're good. I love it.
Okay, so are you able to split? Let's say you charge them $1,000. Yeah, are you able to split 500 and 500? Have multiple reporting to the credit bureau?
And so, unless it's a different bank account, right? Because they're setting up the accounts.
Yes.
So here's the deal. I am extremely creative. Everything we do is legal, but you all know that there's loopholes, right? And we can all be creative with things. A lot of people use this platform to, where you'll see this platform used is with like higher end jewelers, mattress stores, furniture stores. So the way that I've twisted and kind of fit the Rubik's Cube of this program where it aims for financial companies to really add that extra value to change and improve the way that they're improving their credit, their client
Okay.
scores. And James, I got you. We'll talk later. But yeah, yes, it actually
Okay.
does.
Okay.
Ruben, go
Another
ahead.
one. I'm sorry.
Yeah, no,
I'm keep asking.
no, you're good.
Okay. So I own a holding company, real estate holding. Okay. Am I able to report my rent to on this platform? Like on the rents that they're paying on a monthly basis, or maybe the owner finance homes that we own, and
Sure.
they're not reporting them.
Oh,
So are we able to
Ruben,
do
you
something
and
like
I
that?
need to get on a special call.
Okay.
So what I would suggest you do is so if you have credit repair and then you have real estate, I would
Yes.
have you sign up for the platform 2 different times because it's 2 different companies, right? And then yes, you can actually set that up where they're pay that's an even more creative way of using this,
Okay.
Ruben. You should have private messaged me. I'm
I
kidding.
need to
That's
get your
very good.
number.
But yeah, you're starting to see what this looks like, right? Like that's where this platform can do so many things for so many different people, because especially if you're already taking payments. And then on a side note, a lot of people have stopped taking payments because people do chargebacks, people will ghost, people will stop paying. And most of the time you just have to eat it. In the last 3-4 years, I've probably lost $60,000 on non-payments from clients. It sucks.
Yeah.
And if you're proactive and you really want to get that money, you hire a collection agency, they take 60%. So
Yeah.
with this protecting you, and it's protecting you on services only. So with the rent thing, if they defaulted and didn't pay their rent, the platform would not pay the 90% on the rent because it's not the service. So I will preface that if you sell an item and they just stop payment, like it would not work if you're selling like washer and dryers and you want to put have them pay monthly, it will report to the things, but if they default, that won't cover the 90%. So I want to
But
preface that it's on services. So you want to make sure that when you're doing the line by line, that you put and you can break them up, because the thing is you can put multiple services on an invoice and have it paid out.
yeah.
So let's see. I think Ruben, did you have another one?
Yeah, but we can get on a we can get on a call.
No.
We can
Yeah,
definitely get on a call.
yeah. I would like
So
to talk to you more because you have other things going. So
sure.
Jay said, so his business coaching is 5,800. Would the funds come to us or the client under the guaranteed approval program? So the client is paying, right? The client would be paying a monthly. So if my suggestion, Jay, on how to use it, and I would really try to get the 5,800 in a loan for your clients, right? Now, I'm not sure what the coaching is teaching your clients, but this is another way that you guys can use the loan platform to really help them. If I'm trying to change my life and I'm trying to get credit repaired, and maybe I have some collections that I want to pay for to get deleted. Some of you guys do that. I'm not saying that's how you do it. You have credit monitoring, or you have, like I said, they need to get the secured cards, or maybe they need to pay their credit card debt down, whatever it is. Business coaching is 5,800. You put them through the loan program. If they get approved for 15,000, give them ideas on how they can improve or what they can do with their life with that 15K. Because if they take that 15K and maybe that gives them a cushion in the bank, or like I said, they get to pay down their credit card debt and that brings their credit score up, or maybe they needed a new car, or maybe they needed to pay off their terrible car note, or maybe whatever. Just think of all the things. Maybe because they're in the business coaching, they're trying to start an LLC and they need that money and a budget and a website. It's not just, hey, I can help you repair your credit. It's, hey, I can help you actually change your whole damn life. These loans, literally, they're unsecured personal term loans. They're unsecured, no collateral needed. The rates do start at 4.99%. If their credit score is really, really good, they can get slightly lower. We recently got a 4.71%. Okay. So this does lend. People with great credit, they'll get great offers. People with bad credit, they can possibly get offers, which is better than nothing from everywhere else. I heard you say something about business credit. Can we have this report to clients' business credit? So It cannot report to the business credit bureaus. That's not how this works. You can, however, break up if you're doing a business credit program or a service, you can break it up into payments, have those payments be protected for you, and you can get those payments every month, and it will help improve their personal, but it will not help improve the business. I recorded this, but was more for my own little personal thing. I'm gonna do another one of these because as per the usual, 91 people signed up, 17 people showed. So, but I'll be doing another one maybe in like a week or whatever. But any other questions, guys? Because we're almost at an hour. Give it to me.
So when using the payment protection program, the payments that they make each month, that comes to me, or and is there like a fee of the platform? Like, is the platform getting like 5% of their monthly payment and the rest coming to me? How does that work exactly?
No, that's a great question. So it actually showed, 1 second. Here we go. Let me share my screen. All right. So here's an example, right? Number one, the platform, this interest rate, that's how the platform collects any of its payment, and then also a small transaction fee per payment. That all is covered by your client. Okay. So this $77.87 a month, that has the built-in. So, and if you look, when you look in the back office, look, once you do that, you send the proposal. So you can have one option. You could also give them a few options if you wanted to. On here, you click this, you can pick any of the months, you can pick any of the amount. You can go back. Whoops, sorry. You can go back. Where was the other ones? So if you start here, okay, what does this look like? What is your estimated cost? So if you could put anything at the beginning, because this is what the screen comes up as. You can put anything as long as it's over $300, right? Then when you go to the next screen, it's going to give you the opportunity. This is your invoice. This is the invoice to your customer. So you put the name of it and you put the amount. What I do is I already know I'm going to do it for 6 months or 8 months. So I've calculated that number. So when you guys say, hey, I do a $297 upfront and then I do $149 monthly, I'm going to put it whatever at $150 monthly times 6 plus a $297, and that's going to be the total amount and how it's going to look like on the invoice. Does that make sense, or did I say that funny?
Yes, yes, that makes sense.
Yeah. So like I said, you can end up adding a consulting fee to this. You can add the credit monitoring to this, whatever, right? Then how much is the down payment? Like I said, I'm not telling you guys to adjust anything you're already doing. It's going to take like this is going to take 5 to 10 minutes to do and to get your client set up, but you take the same amount of down payment. Everything is right out here. Then you figure out which months and you send the proposal. Boom, you send the proposal, you download it, you have all that. They make the payments into the platform. So this right here is also how you receive the payments. It's going to be set up. Gotcha, Ruben. It's going to be set up to where you get paid, then you deposit it. Boom. If the payment doesn't show up, you go into the back office, you say such and so didn't pay. You show proof of the service, the platform pays you as long as it was for a service. That's the payment plan. I don't want you guys to get too confused because it's like 2 massive, awesome platforms in one. So what'd you say?
Yeah, that's the part that was confusing. You have to understand it's 2 different platforms.
So it's 2 different parts, and it's one fee of $240, right? It's a one-time fee. On the loan section, it's a $49 maintenance fee monthly until 6 people are funded. The way that I can consult you on the loan part is you charge anywhere between 4 and 10% as a back-end success fee. I have that. You can create an addendum in your contract and add that to it. I have an example for y'all. I suggest doing an ACH payment, which you can actually do within the platform. So this protected payment platform, you can also send out invoices for them to pay. And you can either split the payment processing fee or put the fee on them. So it could be 0% payment processing. So you can get ACHs for free. You can get payments for free through the platform as well. So it can do a few different things all in one, and everything's going to be tracked. Really, the biggest purpose is you're going to help your clients either be able to pay for your services. How many people are like, I can't afford this or I can't do this, right? So you have those type of people. You have people that are going to need help to improve their credit with the secured cards and things like that. That helps. The loans report, the payments report. If any of you guys get a little bit confused by it, I promise you, it's simple. Let me, I'll do this for y'all. Does someone have a question?
I have I have one more question.
And I do too.
So when doing the other platform where you're actually doing a actual loan, and you're the success fee, right? That comes to me. You say do it in the form of ACH. Does it go out with the loan, the guarantee that I get it?
No. So keep in mind, there's not a guarantee that you can get it. And I'm very glad that you asked that question. You could have clients not pay. That is true. You could have clients not pay. That is why, number one, you add an addendum to your contract. Number two, you speak to your client ahead of time and talk about the fee. If they have issues, you can always ask me for help. I'm really good at overcoming a fee objection. But you can also adjust the fee if you want. You could cap the fee. You could say, listen, if you get anything over 75K, we reduce the fee. It's completely up to you. If you don't want to charge a fee at all and you're just going to charge the 4% to cover your fee, you can do that as well. It is totally up to you. But the best way to ensure that someone pays is, number one, you talk to them up front about the fee. Number two, you show the value, because you're doing a lot for these people. A lot of these people, they wouldn't have any other options. So they really do appreciate the loan. Once the loan comes in, you congratulate them. You send that invoice out because you've already made the agreement. They've signed the contract. You send that with the ACH form. If they don't pay in a certain amount of time, they've signed an ACH form where you can ACH that stuff out of it. When you do the ACH form, you can Google one and just get a basic ACH form. Ensure that you get a voided check or some type of official document that shows their entire routing number and account number to ensure that they didn't put the misinformation on there, and you should get paid.
Okay, all right, thank you.
Okay, so my question is real quick, actually.
Sure.
Both platforms, they do not get declined, or only under the 20,000?
Thank you. So the lending platform can get declined. They are lenders. So there are 25 lenders. They only advertise 20, but there are 25 lenders. 3 of them lend to subprime. So 3 lenders understand that some people's credit is subprime credit. Anywhere between 500 to really 640, 650 is considered subprime. So they will possibly lend. There are no hard pulls. So you send out your link to your client, they put their information in, they get instant approvals. The goal is to get them several approvals. They'll have a few different terms, a few different rates to choose from. That's the goal. Sometimes they may only get a few. It pulls from all 25. It's going to throw it out there to see which of the 25. Again, no hard pulls. They're never going to know that those 25 lenders got their information and they looked at that. So that's a really great question. So that's how the lending platform works. Now, if you don't want those subprime, those higher, like I said, those higher APRs, you can actually have them removed from the platform. The platform is you can do a lot with it. You can do a lot with it. You can add, subtract. Like I said, the team will train you. I will bring marketing and advertising ideas. No inquiries, Jay. Soft pulls, man. Soft pulls. Soft pulls. Nobody even knows you're there. Anytime you get funded a loan, there is a hard pull upon funding. That's with everything. So yeah, you'd get one hard pull taking one loan, but no, we would never do 25 inquiries. That would be insane, by the way. And unfortunately, there are companies out there that do that. Pro finance. Mom and Pop, David Allen Capital. Okay, I'm gonna open it up to anything. That's why I asked. No, I love it. Great questions, guys. It's important to ask. No, there are platforms that would do that and totally destroy a person's credit score. We are very responsible, and we don't want
Just
that.
for
So, yeah.
just for transparency. So it's a soft pull for the loan, for the lenders, and then once they decide that they want it, it'll be a hard pull.
Upon any time you get funding, upon the lender funding, they do one hard pull.
Okay, I just need to know that. Okay, thanks.
You're welcome. And let me see. I need to go back. Whoops.
Could they possibly get declined?
On what?
Say, for instance, the soft pull, and then they were going to get funded, and then it turns around and they get declined?
Very, very great question. It is possible during any final underwriting with any company, right? It can get declined. So when they go into final underwriting, that's when they do a background. They can get declined if they put in the wrong information and they couldn't verify. Okay. So when you're utilizing the platform, if you have issues, if you are utilizing the platform and you feel like the candidate was good and they shouldn't have been declined, reach out to me. Myself, I'm going to show you my cell phone here in a minute. You can reach out to me directly and I'll take a look at it and see if it's something that we can do. Okay. This is just one thing that my company offers. We literally do every type of funding under the sun, but I saw this platform and I saw how much it could change, the credit repair industry. Real quick right here. Boop, boop, boop. Let me go through this real quick. Scan this QR code if you're interested in joining. If you pay with a card, you'll get set up in 24 to 48 hours. The team does onboard Monday through Friday. If you put my name down, they do onboard you quicker. And because you came to the platform through me, you get special training in my group and special support with the marketing in mind. So put your phones up and scan that right there. You can also message me on the Facebook. You can text me. Like I said, I've served 4,200 clients in financing, over 3,000 students worldwide. So, I'm getting up near 10,000, people impacted. I created CAP funding because there was such a void in the finance industry. There's too many bad seeds and too many people being misinformed and deceived. So my company is all about financing your clients, financing you, helping you get better payment processing, and helping with customer financing. So I'm going to wrap it up, y'all. I appreciate the people that came on. If you have any other additional questions, please reach out to me. And thank you all for joining.
You rock. Thanks so much.
Thank you.
Bye, guys.